I've got a new strategy for you guys. If you're a scalper, then you're in luck. This strategy is for scalping. It's one of the best scalping strategies I've seen. And trust me, you won't see this strategy anywhere on the internet. I'm the originator of this strategy, and if you want to learn more about the strategy, then stick to the end of this video, because if you don't, you might just not get the full information on how to make it work for you. Also, subscribe to the channel. I release new videos every week giving you strategies that ensure you get the right strategies for your trading. So hit that subscribe button below. Here's how the strategy works, but first you need to add the following indicators. We'll be using 3 TradingView indicators for this strategy: the 9 exponential moving average, the 13 exponential moving average, and the 50 moving average. To add them, go to TradingView and click Indicators, type in Moving Average Exponential. Click on it 3 times. Once done, go to the settings of each moving average and set the first one to 9 with the color blue. Set the second at 13 with the color white. And for the 50, set the color to be purple. Done? You should be good to go from there. This strategy uses the 1-minute time frame for scalping. Here's how it works. We use the 50 moving average as the trend indicator. It shows us the direction we should be trading. In this channel, we usually follow the trend. That's your safest bet. Going against the trend may kill your account. Why? Because you're going against the overall direction of the market. In order to determine the trend, we need to see the 9 and 13 cross over the 50 moving average. Here's how to determine an uptrend. 1. 9 and 13 cross over the 50 moving average to the upside. 2. Price is above the 50 moving average. For the downtrend. 1. 9 and 13 cross over the 50 moving average to the downside. 2. Price is below the 50 moving average. That's how we know if we should be either buying or selling. Now to determine a setup, here are the requirements needed. 1. In an uptrend, the 9 EMA has to cross the 13 EMA to the upside. 2. After the crossover, price comes back down to either the 9 EMA or the 13 EMA and closes below. 3. Once a close below has been identified, wait for price to close back above both moving averages. 4. Identify these 3 candlestick patterns: hammer, railroad tracks, and star formation. Here are examples of those candlestick patterns. For the star formation, this is what it looks like. Could be called a morning star or evening star. Here's what a hammer candlestick pattern looks like. And finally, here's what a railroad track candlestick pattern looks like. These are the candlestick patterns you need to identify before and when price closes back above both the 9 and 13 moving averages. Once all those requirements are met, take the trade. Set stop loss above or below the structure. Go for 1-to-1 and 1-to-2 on these trades. Let's take a look at some examples. In this example, we see the 50 moving average is above price, meaning, price is in a downtrend. So we will only be looking for sells. We see the 9 EMA is below the 13 EMA, which means they have crossed. Now we see a pull back to the moving averages. And closes above and back below. Gives a railroad track candlestick pattern. That's the entry. Right at the close of the candlestick railroad track. And as you can see, this trade worked perfect for a 1-to-2 risk to reward. Let's look at a second example. Here we see the 9 and 13 cross the 50 EMA. So we're now in a downtrend looking for only sells. Price pulls back to the 9 and 13, and closes above, the next candle closes below and gives a railroad track candlestick pattern, and we enter right at the close. Straight to the take profit. That's awesome. Let's look at a buy example. In this example, we see that the 9 and 13 cross the 50 EMA. So now we are looking for buys. The 9 and 13 have crossed each other already. Price comes back and closes below the 9 and 13 and 50. And the very next candle closes back above, giving us a railroad track entry. Price rises straight to the take profit for a 1-to-2 risk to reward. Here's another example. The moving averages cross over and the market pulls back to the 9 and 13. It closes above the 9 but not the 13. Gives a star formation and we enter. Straight to the take profit. It later gives another trade. Here it closes above both the 9 and 13. It gives us a railroad track entry and price goes straight to the take profit. Both trades are 1-to-2. Beautiful, right? Scalping is really easy using this strategy. backtest it and see how well it works for you. Once you're consistent, trade it on a real account. Warning: you can't be consistently profitable unless you know the trading principles needed to be consistent. Check out the video in the description to find out.